So let's just take a look at the relationship that you've got with Vitol, and of course, given the fact that you've now sold that 50% stake in Cockett Marine Oil to Vitol in exchange for a lot more synergies down the line.
Elena, thank you. Yes, absolutely. We've had a relationship with Vitol for a number of years now, obviously both as a customer and a supplier, given that Vitol is probably one of the world's biggest energy traders. They focused originally on oil and then have grown and growing largely in coal, and of course, therefore, the focus on South Africa for them. We are obviously very excited by this relationship, and you would be aware that we signed an agreement with them in January to do with our Maputo coal terminal and to do the coal trading through our joint venture with them as well.
Okay, so what's also interesting to note here, if you just take a look at, the fact that Cockett Marine Oil, it's the largest independent energy trading business in the world. This must have been a tough decision, or wasn't it a tough decision in terms of selling a 50% stake in such a strong company?
Well, Cockett Marine is very focused on bunker fuel trading and is busy establishing itself as a physical supplier of bunker fuels as well. And Vitol itself is a crude and oil products trader, much bigger than us, but they were looking to get into the bunker fuel market. And with obviously a lot of their physical supply and their trading ability, it was made common sense for us both to get together so that they didn't recreate something that we already had.
I know that you're not mentioning the amount, it's basically not been disclosed as yet, but given the fact that Vitol is going to be building 4 medium-range product tankers in Korea, what is the actual relationship in terms of the contracts that we'll be seeing between Grindrod and Vitol?
The price of MR tankers out of Korea at the moment ranges between $36 million and $38 million each. So you could work that out. The size of the ship transaction is the Cockett Marine Oil transaction. That obviously we're expecting the business to grow substantially going forward. So in due course you will see the amount for which Vitol has paid for their 50% share when we announce to the public number.
We've also seen too many ships that are currently creating a bit of a problem within the industry. I know that we've spoken to Grindrod before, and there is an indication that we could actually see the old ships now being withdrawn and then newer ships coming on board. Do you expect this trend to continue? And we've also seen a lot of consolidation, a lot of companies being liquidated because of the new change within the trends that are now going on from a global perspective.
Absolutely, Elena. You would know that shipping is all about timing and about low cost. We believe that the Grindrod management team over the years has been very good at calling that time in the market. We do see that both dry bulk and tankers are sitting at very, very low places in the overall cycle in the market. So we will start to see, we think, people coming in to purchase ships from now on. Probably not for a while yet on the dry bulk, but certainly the tankers, we can see how the rates are starting to shift.
And Andrew, I mean, you mentioned a little earlier with regards to Vitol acquiring a 35% interest in the Maputo coal terminal as well. I mean, is that where it's going to stop, or do you think that you could actually get a bigger interest coming through from Vitol?
No, I think, our relationship with Vitol is very focused. It's around the oil and the oil tankers, and around coal and the coal trading. There's no real other synergy that we see in Vitol for now, and we think that what they can bring is their big balance sheet, a very powerful player. They've got good synergies with ourselves, as you've already alluded to, and also their expertise in both building and operating terminals and from trading. We think that's good value for our shareholders.